when we talk about investing in real estate, today we're going to be taking you through different real estate investing strategies, fix and flip versus buy and hold, the BRRRR method. We're going to talk about financing. We've got an amazing lender partner that I've used for years that'll be joining us to talk about how much do you need and how can you structure things with your financing to make sure that you can have a repeatable investment portfolio. We'll be talking about what types of properties to look for in investing in real estate. So whether it's condo, single family, multifamily, all of that, we'll be talking about the pluses and minuses of all of that great information. And we're going to try over the next 35 to 40 minutes to give you as much information as we possibly can. Now, if you are interested in taking the next step after the seminar, obviously some of you were invited by different members of our real estate organization. Make sure you connect with them and then they'll take you to the next steps. If you haven't connected with anyone, feel free to connect with me and we'll get you started in the process and make sure that you start building wealth through investments, which is one of the greatest ways of building wealth that we have on this planet. So it's about 6:02. We're going to jump into our presentation here. And let me get to my first slide. There we go. All right. So let's talk about why investing in real estate. Obviously, we talked about building financial wealth. And I always think it's interesting to talk about a few of these key stats. So the 2019 U.S. Census Bureau said mom and pop landlords own 20.5 million rental units across the United States. So if you think about mom and pop rental units, that just means that this isn't a company, a corporation, and that was the last census in 2019, and that number's obviously increased and grown. And when we look at that, why there are so many landlords is usually people become what we call accidental landlords. So it wasn't intentional. A lot of landlords receive properties in inheritance. They needed to move and couldn't sell a certain property, so they decided to go ahead and rent that property long term. There's a very small margin of investors that decided to learn enough to start getting into the game on their own. And that's what we're going to be talking about today, is looking at it from a strategy, not just a kind of mom and pop situation. And then, so the average median household income was $61,000. The average median income for landlords or people that owned at least one investment property was $97,000. So there's a huge discrepancy in overall wealth. And if you build that up over time, you obviously it goes a lot higher than that. And then as of Q1 2021, as a number of average returns of 10.3%. So an average return of 10.3% on your money. And if you're here in the Front Range area, you're joining us from across the country here in Colorado, it's been almost, well, in some places, double that when you're looking at those returns. So we're going to talk about the pluses. We're going to talk about some of the risks and some of the things that could be a concern. But the other piece about investing in real estate that I think of beyond anything else, of any stat that could possibly be out there, is leverage. When you invest in real estate, you're having your property, you're having your money work for you. And you're having, obviously, someone pay down your equity, you're receiving money coming in. You can do a number of different things to grow that. But what we really want to look at is, in anything we're doing, how do I produce leverage? I think about that word all the time. And investment properties, rental properties, give you a long-term leverage capacity that you can cash in on at a later point. All right. So just think of that word anytime you think about investing. All right. Let's talk about a few of the myths and some of the concerns that I hear people have questions with all the time. I don't need to be an investor. My job will take care of my financial future. Well, boy, do we know that's a complete false, right? So your Social Security, not your 401k, will not provide real security. Net worth, retirement funds, kid college, have enough money to take cool vacations, buy sports cars, and other things for your parents, right? So if you're depending upon your job to build long-term wealth, you can do that. The hard part about that is that you're not having someone else pay for your equity. Even if you invested in the stock market right now or your 401k and all of these things, the secret sauce, of course, when it comes to investing is someone else is paying your debt. Like, think how crazy that is. Someone out there is going, you know what, Christopher, I'm going to pay your debt for you and create equity for you that you can use to do great stuff with your family and kids and legacy later, your church, your community. But I'm going to go ahead and do that for you. There's not another real investment quite like it. All right. Investing is complicated. Oh my gosh, it's so complicated. I don't know how I'm going to do this. How do I jump in? It's not complicated. It just takes a few hours of education. Then it takes probably a real lifetime of learning how to become really, really good at it along the way, right? So and plus, that's why you have trusted real estate experts, is to help guide you through this, right? If you were going to do anything in your life where you needed, let's say you're going to climb Mount Everest, you wouldn't wake up and be like, you know what, I'm going to go do that by myself, see how it goes, right? That would probably be a little tricky. You're going to want a guide, you're going to want an expert, and you're going to want somebody that's been there, done that, knows how to get you where you're going. Okay, so it doesn't have to be complicated. Investing myth number 3, it'll be risky. And what if the market crashes and I lose all my money, right? So historically, we know that real estate is one of the safest bets that you can possibly have. One of the big things here, right? Slightly higher risk than a savings account with much higher return. Right. And I don't know what your savings account is, but right now, if the average return is 10.3%, I don't know of any other account on earth that's getting near those results. Even the stock market being more volatile to that over time. And as I said before, if Apple goes, let's say that the company Apple crashes and goes to zero, that's the difference in real estate. With real estate, you can always rent your property. Your investment's never in a scary situation where you're not going to be able, unless, I don't know, you burned it or something, you had some crazy piece to do it, but you're never going to be in a piece where you're going to reduce all of that entire risk. Okay. All right. Number 4, successful investors are able to time the market. That is not true, right? The question is, of course, are there luckier spurts when people invested? It's not about that. It's about how much time you've had in the market, not about when you get in the market. If you're really going to be a serious, and I mean a serious investor, it's not the timing that's going to matter a great deal. It's how much do you have and how long have you had it for? So how many units do you have? How many doors, as we call them? How many doors do you have? And how long have you had them? And have you leveraged those properties for refinancing, for debt? We're going to talk about some strategies here to grow that portfolio. Okay. It is always the right time to buy the right property. So remember, there's good investments out there and bad investments. Duh. And you make your money when you buy. So your trusted real estate professional is going to help give you insight on, hey, look, based on the stats and looking at everything we can forecast on, this property, I would say at this price would be a good buy. This property at this price, average. This property at this price, not so much, right? So we have enough data, but no one's ever going to get this perfectly right. The only way to get it right is to have a lot of it over time. That's it. All right. All right, let's talk about the power of investing in real estate. So real estate is an able investment. Its value never goes to zero. That's why it's so exciting, right? It can do a lot of things. Anyone can buy it. Value increases over time. It's rentable, which gives you cash flow. Now, this is the big one too, is a lot of first-time investors are going to put their sweat equity into it. So your muscle power is going to improve that asset. Cleaning up the landscaping, painting it, doing a lot of these manual labor type things. Well, if you're taking on that grunt equity, you're going to get out the maximum net because you're not having to pay someone else to do it. Real estate, of course, we talked about it, stable, slow to rise, slow to fall. You have obviously tax deductibles. It's depreciable and deferrable, right? All of those things being very, very important. All right. And we have great accountants. We can talk about all the tax benefits, 1031 exchanges, all of that. I'm not going to spend a ton of time on that today. Today is more about how to get in and how to make sure that you start getting this to work for you. But I wanted to make sure you first understood the opportunity. So here's how it compares with our return on investment versus other investments. All right, so left column, you've got stocks, and then you got mutual funds, money market, and then investment property. So if you put 100 grand into each one, I don't know what happened with my marker there. That was weird. Did I do that? I don't know. Maybe I hit that yellow. I don't know. Right. If you look at the slides there, right, when you're looking at this, your initial start value, right, if you put 100 grand in stocks, a carrying cost of 1 to 4%, depending upon your fees, you're going to get about an 8% income turn every year. And then your adjusted return on investment is 4 to 7%, with potential loss of being 100%, because if that stock crashes and goes to zero, which it has, we've seen in the past, there's a major risk there. Mutual funds, you can kind of see that very similar, a little bit less of the adjusted return on investment goes up a little bit more. Money market, 2%, that's going to be the lowest. And then you can see the potential for the real estate, right? So when we're trying to look at potential loss, right, much safer, you're going to have a much cheaper cost of entry, because again, for $100,000 property, generally speaking, and we're going to tell you other ways today, you're only putting $20,000 down. So that's the major difference there, is that you're not paying the full amount like you would to have to buy 100 grand of stock. You get to own 100 grand of stock, if you will, for $20,000 or less. Then you've got appreciation. And then the other income obviously is rent and cash flowing on that rent, on top of someone paying down your equity or paying down your debt, excuse me. All right. So lots of opportunity there. Lindsay, are you seeing those green lines on there? No. All right. I don't know what happened. Somebody wrote on my thing. Okay. I think it's on the, hold on, guys. Let me just stop this for a second. I don't know if somebody wrote on my screen share. There we go. It's off now. All right. Thank you. All right. We talked about why people invest in real estate. So tax write-offs, a big one there, grow net worth, and then of course, college education savings, right? All great things. Let's talk about the tax write-offs, because this is a big piece of it, right? So mortgage interest, financing cost, right? Points paid on the loan, depreciation, capital improvements. So you put a new roof on, siding, etc. The personal property, furniture, lawnmower, operating expenses, maintenance expenses. And we mean personal property if you're doing it as a Airbnb or as a short-term rental, and then closing costs, right? So many different ways to leverage this, because the government wants to have people involved in real estate and in ownership of real estate. Now we're going to get into what kind of property should I buy? All right. So here's a couple of things to consider as we're going through this, right? Neighborhood, property taxes, school, future developments, number of vacancies. Let me go back to this one for just a second. All right. So as we start to think about what type of property to buy, a couple of things to consider here is, what do I want to deal with, right? What kind of problems do I want to have? So if I own a condo, I'm going to generally have less maintenance to deal with, but I'm at the mercy of having to deal with a condo HOA. So they could start putting in new rules, they could change things. It could be harder for resale because of that HOA when I go to sell that investment property. So you have less maintenance at times, but you're going to have a lot more restrictions of what you can or cannot do with that property. Single family, you may have more maintenance involved, but you own the land, you own that property, and you can do whatever the heck you want with it for the most part. You're not going to be constricted as these other properties. Multifamily. So multifamily is fantastic, but the entry cost generally to buy, 4 units or more is going to be heftier than your ability to get in to a condo or single family home. And then as you get into the multifamily, the 20, 30, 40 unit properties, again, same entry problem is barrier to getting the money to be able to get that cost to where it needs to be. So in looking at that, what I always tell every one of my clients is, I want you to feel comfortable with your first or second property, especially when we start this out. So if you're super busy and you're going to have a management company handling it, we'll talk about all of those things, and you're going to not necessarily be able to deal with it one-on-one, then generally you want to feel comfortable with it. You want to be able to drive by that property, right? If you're an out-of-state investor, can you do it? Of course you can. It's just going to, how much stress are you wanting to deal with, right? How much lack of comfort? Do you want to be able to stop by and meet with your tenant if the neighbors are complaining that their dog's barking all the time? So you got to just start thinking about your level of comfort, your level of care, and your level of concern, all right? Which will help quite a bit. All right, so now as we look at this, the next thing is, should I do fix and flip? Meaning that I'm just going to buy properties, fix them up, and then sell them in a 30, 60, 90-day flip type process and take the money from that and go on to the next property. Or another method is just really a buy and hold method, or what we call the BRRRR method, which is buy, rehab, rent, refinance, and repeat. So let's talk about fix and flip here for a second. So I hear people all the time, you know what I want to do? I just want to fix and flip houses. It's awesome. I get a lot of cash from it. I watch all these shows on TV, and these guys are making movies or TV shows about all this stuff. So if you really think about it, and if you're going to be a fix and flipper, there's 2 paths to go here. If you're going to fix and flip, you're going to want to fix and flip a lot for it to ever make financial sense for the amount of risk that you're going to be taking. Because when you're doing this, it's not something like, let's just say that I'm a one-off person and I want to go do a fix and flip property. Can I do it? Yes. Does it make sense? It would really depend on the numbers, because where you make money in the fix and flip business is your crew. And if you don't have a trusted crew, meaning contractor, all of this, or if you're trying to do it yourself and you're going to take time off of work, or every weekend you're going to be working on your fix and flip, in my experience and working with lots of clients, it's not really worth the time or the headache. If you're going to have a fix and flip company where you're going to get a long-term contractor, you're going to have landscapers that you feel comfortable with, you're going to be doing 3, 4, 6 of these a year, and you've got it, to where it's going to be more or less a profession at some point, so you don't have to work your whatever job you're not wanting to do, then think about that as you move into this. The other piece of the fix and flip that's highly concerning is the risk, right? You buy this property, you find out, you think it's going to cost $20,000 to rehab, you get in there, house ends up being $35,000 to rehab. I know fix and flippers that have many of times lost their money on a fix and flip and the risk that goes along with it. Okay. I also know fix and flippers that make a ton of money and that have a huge success, with it as well. It has more risk. You just have to think it through. Now, we know a long-term method, which, as I said in the beginning of this, you want more and long-term, more properties, more doors, and own it for a long time. Okay. So when you look at the BRRRR method, right, you want to find a property to buy. You want to rehab that property, minimal rehab. So we want to take a property that is ugly and busted, and we want to shine it up, right? So we can increase the amount that we can rent it for, get a renter in there, go back, refinance that property, pull cash out of it, take that cash and go buy another property and repeat the process over and over and over again, right? That play, no matter how you play it, unless again, you run out of money and you have to sell everything during a low point in the market or something like that, then that's where you're going to see a lot of success. Any questions on fix and flip versus a long-term buy and hold scenario? Nope. Great. Well, that makes my job easy. If you think of any questions, I'm always here. Let me know. We'll keep it moving then. So when we were talking about these properties before, right, different styles, and we kind of went through all of those. I wanted to point out some of the pros and cons of these units, right? So if you're buying a condominium, right, you've got lower purchase price, maintenance is included, more amenities, we talked about that, high HOA fees, only on a percentage of the land, and you have shared liabilities. We talked about the single family unit, so easiest to resell, typically surrounded by owner occupants and more appreciation. Cons, only one unit to generate income and 100% loss when vacant. Then we get into the duplexes. So less risk than a fourplex, more cash flow than single family homes, lower appreciation, and usually surrounded by other rental units. And the reason it keeps talking about other rental units is just because they usually bring down overall property value, right? If you have a single family home that you're renting in a neighborhood of a lot of other occupied owners, they're going to care about that neighborhood, and what's going to happen? It's going to raise your property value up. If you own a duplex and everyone in there is a renter or a bunch of landlords, are the renters going to take as such good care of that neighborhood as they would if they owned it? Generally, we have seen that's not the case. All right. And then fourplex, very similar in a lot of ways. Again, less appreciation over time, more upkeep, and then tenant damage. So we also wanted to jump in, and I'm going to go back here for just a second to the strategies here. So as we get into what I look for when I buy an investment property, right? And one of our real estate professionals will be able to help you with this, but I always ask my clients, I say, where do you want to be? What part of town? Where would you feel comfortable? Then they usually say to me, Brendan, I don't care, just find me the best deal. So how do you find the best deal as a real estate investor? What would be an indicator that you would be looking for as you're trying to hunt for your first investment property? Well, I'll share a few of my favorite, right? So cash flow, I think Grant said cash flow. So one of the factors you would be looking for is, yes, when I buy this, after all expenses, meaning my rent, taxes, utilities, everything else, am I making $10 a month, $50, $100, $500, right? Obviously cash flow. So that's a big thing to look for. When I'm hunting for properties, what I'm looking for is in areas, the lowest price per square foot property available in that specific area. So I have searches running in very specific neighborhoods for properties that have the lowest price per square foot. So for those that are new or listening to this, you think about it, if in the neighborhood, the average price per square foot for all the homes are $200 a square foot, I have settings in my searches that pop up and go, this house just hit the market for $125 a square foot. When I see that $125 a square foot, what I usually discover is it's ugly, right? It's either ugly, it backs up to a train, it backs up to a dumpster, it backs up to something. There's some reason why this property is not, in the eyes of the general public, as valuable as the others, okay? So those are the gold. That's what we're looking for. Then what our team does on top of that is when we have an investor profile for our buyers, we start scouting and making phone calls. So our team makes anywhere from probably 4,000 to 5,000 phone calls a day trying to find prospective sellers for our investors and our regular buyers. When we do that, we talk to a lot of people and we find people that are in distressed situations, i.e., they have to sell because X. Whatever the situation might be. Our ideal seller for an investor is someone that has to sell and is willing to sell because of convenience, not maximum net. So one of the properties I own, and I always tell this story, was here in Aurora, Colorado. And the owner, older couple, probably in their late 70s going on 80s, they had moved quite a bit around, and they go, look, there's a property in Texas that we want to move to that only has a few lots left that we really need to move. If we don't have the money to do this, we're going to miss it. I don't want people entering my house because I have a lot of antiques, so I don't want to show it. So if you make me a cash offer on this and we feel it's fair and reasonable, we'll discuss it and possibly accept it. So made them a cash offer for 70% of what the market value was. So 30% under market value on that property. And there was an agent that worked with me that found me that deal. They also got paid another 5% commission on that deal. And so they sold that property for 65 cents on the dollar because of convenience, and they didn't want somebody touching their antiques, and they needed the money in a certain amount of time. So investing is when opportunity opens the door, but you got to make a lot of contacts and have a lot of conversations for that to happen. Own that property now for, I think, 5-6 years. Also, it was in one of my favorite areas to get rental properties, over 55 communities, right? Because you know they're usually going to probably take care of it. You got instant security built in, and old people are nice. I don't know what to tell you, right? It's just nice people to deal with, right? So some of them, not all of them, some of them, but not all of them, right? So that makes it a lot easier. So it takes a strategy to find the good properties. What people keep saying right now is, are there any good buys out there? Of course there are good buys out there. Every single day there is a property, that would be a perfect investment property. It's just, are you there at that right time? And what we're talking about today is, do you have that package set up so when it's time to pull the trigger, boom, lending's there. You've got this letter that you need. You've got this. We'll talk about what you need to make a perfect offer, right? All of that's ready to rock and roll. All right. So in a moment here, we're going to be bringing on our guest, which is Annie Lemon from Bay Equity Finance. And she is been a long-term lending partner with myself and our organization, does all my personal property, does all my friends, does everything I know, and is an investor herself. So she has a lot of insight on this, and we'll talk to her and kind of understand the questions, because first piece about this is just making sure, once you understand how easy and accessible the money is, then the next is just be on alert with your agent for when the right opportunity strikes, and then you can jump on it, right? That's all this is. That's all it is preparation, being ready to rock and roll, and then pulling the trigger when you come across that gem, right? So we've got a couple of questions we're gonna run through with her. If you have any questions for her as well, we'll always have her information here. We're going to talk about qualifying issues, first property versus next property, but really, I just broke this down into my top 5 questions that I really think about when I talk about financing and when I look at the lending piece. So if you have any questions after this, feel free to connect with Annie individually. She'll be able to help you through it. All right. So Annie, are you joining us? Are you here?
I am here. And to your point, Brendan, I'll put my info in the chat just so everybody has it in case they need it.
Thank you.
Yeah, thanks for having me.
Absolutely. Yeah. So Annie, how long you been in the game? How long you been slinging mortgages?
Oh, it feels like forever, but I would say about 12, working on 13 years.
13 years. Excellent. That's a long time. And have you ever done any investment properties?
Yes, but by definition, an investment property doesn't mean you necessarily have to buy it as an investment property.
Sure. Right. Absolutely. So we're going to keep on track here with some of our favorite questions that we came up with. And so Annie, I'm looking to do my first investment property. How much money do I need?
Well, it's a loaded question. I know you love it when I say that, but as little as 3% down or $1,000. I mean, it depends on the qualifiers and of course what type of loan you're looking at, but really that's what it takes to enter the market.
So 3% down or $1,000, and the $1,000 would be in what situation?
$1,000 would be in the situation of a down payment assistance program. So there are programs out there that will grant you these funds in the event that, of course, you qualify, and you do not actually have to be a first-time home buyer. So there are programs available for those that are not first-timers. I'm actually doing one right now that she has a rental and an investment property, and she's utilizing a down payment assistance program to purchase a second home, which will therefore be her primary.
I love it. I love it. And I know it says, what interest rate will I pay? Of course, we're not silly. We know it fluctuates. How much different on average do you think it is from a owner occupied versus rental property?
About a point.
About a point. Yeah. And that's what I wanted to make sure everyone knew is, yeah. So you're going to be looking at about a point difference on average, but again, depends on the situation, depends on your situation, all of that fun stuff when it comes to that. On average, how quickly could I close on an investment property loan?
21 days is the average. I've done faster, but it really depends on the client.
Okay, so 21-day closing, depending on if the client gets you all the stuff they need, what their situation is, are they still, hiding their taxes, all that stuff, right? All matters.
Yeah. Mattress money, all those.
Mattress money, yeah.
Yeah.
I love it. So all that matters. So about 21 days, but typical loan is about 30 days, correct? I mean, on average.
I mean, truly on average, it's 21 days. I haven't done a 30-day closing in 6 months. So.
Perfect. So 21 days. Excellent. Can you give us a ballpark estimate of what to expect for closing costs? Let's just say $500,000 property. I'm going to go buy a $500,000 single family home. What would I be looking at to pay generally? And we're not going to hold you to this, but just trying to factor in for my numbers. What would I be paying on average in closing cost?
$500,000 purchase and just closing costs, you're going to be looking at $6,500 on average.
Okay. And what's included in that number?
So you'll likely have lender fees. All lenders charge them. They're typically broken out into 2 different fees. And most people don't know this, but those lender fees are the only fees that a lender will assess. So every other fee that's listed on your loan estimate is actually a third-party fee. So things such as your appraisal, which is roughly $600, your title fees, which the title company dictates how much that is. Those run about $1,200. And those are really the only true closing costs. And then you have your escrows. So your prepaid items such as prepaid interest, depending on the day that you're closing that month. You have to pay your homeowner's insurance 12 months in advance, and then we collect an escrow for future years so that we can pay those bills on your behalf.
Riveting. Okay, so hopefully everybody got all that. So basically, right? No, it's great, and I love what you do. I'm always like, Annie, just where do I sign and give me the money, right? Like that's
Yeah.
usually what I ask for. No, but she'll, of course, we joke, but she'll go through all of this with you as we get into that process. The first step. So Annie, really, if I'm starting out today and I go, look, I already let's even just say I don't even own a home. Like you just gave that great example. I don't even own my own home. I'm gonna live with my mom, and I want to go buy my first investment property. First step is call you, right? And you're going to do what? You're going to do a pre-qualification with me?
We're going to have a conversation, very informal. You can ask any questions if you have them, then we'll talk about next steps and what it will take to get pre-approved. That next process is going online and filling out the application, which takes anywhere from 20 to 25 minutes.
And what are some things that I'm going to need to do that application? Like what are you going to need from me to tell me how much money I can get?
So your employment information, I'm going to need assets. So if you have a 401k account, what the balance of your checking is, what the balance of your savings is, any other asset accounts that you are planning on using for the transaction, that is what I would need.
Gotcha. Perfect. Perfect. Excellent. And then from there, you'll give me a pre-approval status saying that I'm able to make an offer for said amount on said property, correct?
I'm sorry, what was that one more time?
So then after that, I'll get a pre-approval letter of some sort saying that I'm qualified to buy up to this amount of property.
Yes, that is exactly right. So once you submit the application, I review your documents. At that point, you're going to receive a pre-approval letter that has your maximum purchase price, the financing type, and we'll schedule another call to go over everything.
Gotcha. Perfect. And then and I know we want to respect your time. I know you lend on single family and multifamily units. If I paid cash for a house last month and fixed it up, rented it out, can I refinance it with you immediately?
Yes, but it's something called delayed financing. So if you're going to go that route, you have to be very careful where the funds come from to actually purchase the property, because we have to verify where those funds came from, given they're not technically considered seasoned funds.
Gotcha.
So,
Again,
you
riveting.
yeah.
So
Does
the
that answer
answer
your
is
question?
yes with conditions. Always yes with conditions. All right.
Correct.
Well, Annie, and I know you got the little one. I thank you jumping on with us. We appreciate it, guys. She put her information, or everyone, she put her information in the chat box there. We also will make sure we send it out to anyone that registered for the event. But that's a big piece of this. And so when I think about the lending, Annie, anything else for everyone that you'd like to mention?
You know, talking to a lender is not something that is super formal. I mean, think of it as more of a financial consultation. We're having a conversation. I'm giving you advice on what you would need to do to best position yourself. So it's not that you are signing a document that says, I'm going to do this. It's really, truly just a conversation.
Is
And
it going to
I'm here
affect
to
my,
help.
like that first conversation? Are you going to ding my credit or anything like that?
Not necessarily, but that would be something that would have to happen in order to issue a pre-approval letter.
Right. So we could still talk, get a general idea, not do anything with my credit. And then as we move forward, then I go, hey, look, okay, now I'm giving you the green light. Go ahead and check what my credit is. And then obviously that'll verify everything. But even if, let's say I do that and I never do anything, does my credit rebound from that? And how long does it take?
Yeah. So first part of your question, yes, we have a conversation. I can then run credit. I'm always going to ask permission, and it's all going to be based on what you're comfortable with. So to the second part of your question, and I'll be very frank, it does ding your credit. However, if it's within a 30-day window of allowing a lender to pull your credit, whether you're talking to one or two, that is not going to ding your credit. And there are several factors that would substantiate that. And it's a 3-point ding, and it takes you anywhere from 30 to 60 days to recover from it. So by the time you close on a house, you're not even going to know that ding happened. It's not like it's a 20-point ding to your credit.
Gotcha. Okay. Yeah. So, and they have to do this. Obviously, they're about to give you a bunch of money, right? They need to know, are you crazy or not? Right? More or less. Yeah.
Yeah.
Perfect. Excellent. Okay. Well, again, anything else that we can move on?
No, I think that's it. Again, I'll go ahead and put my information in the chat box, and I am happy to help you guys with whatever you need.
Perfect. Thanks, Andy. Appreciate your time. All right.
Yeah.
So now,
Thanks for having me on.
absolutely. So now one other piece I want to talk about on the lending is hard money lenders. So you might hear this phrase, hard money lender. And so you have a lender like Annie that you can work with. You could also get the money from your bank or credit union and build a relationship with them. And you have hard money lenders. So hard money lender, a lot of times you would want to use more in a fix and flip situation. And a hard money lender is going to go, look, kind of like more like a loan shark. They're going to go, Tyler, I'm going to give you X amount of cash. I'm going to charge you a lot more juice, and I want my money back in a shorter period of time. or that juice, meaning the interest is going to go up and up and up until you basically get your kneecaps broken, right? It's going to get to a bad place where we're going to come for you. So if you're in a position and you want a hard money lender because you're like, look, I need more cash. I'm fine with paying the higher rate because I know if you give me this 200 grand for 7%, and I'm going to be able to buy this property, flip it, and have it sold in less than 6 months. And on that, I know I'm going to make X% in return. Well, I'm going to give the hard money lender back their 7%. I'm going to make another 15%, and I'm totally fine unless something goes wrong, and therefore the risk, right? So hard money lenders, you can Google them. All of them have different kind of setups and rates. But at the end of the day, what you heard right now is you can get money for as low as $1,000 to 3%. I mean, with certain programs, grant programs, $1,000, generally more likely 3% of the total purchase price, and then you're going to have your closing costs. Any questions on finance or lending before we move forward? Sweet. All right. And that brings us into our last piece here. So now that you own the property, now how do we make money with it, right? So we're going to determine our rental rate. So rental comps, there's plenty of companies, Renometer, as my friends call it. You can find out how to comp it. Zillow has a lot of rates on there to try to figure out how much should you rent this property for. You have to decide, do you want to use a management company or not? So remember, management companies are going to take on average 9 to 11% of the monthly rent, but they're also going to take those phone calls in the middle of the night when the hot water breaks, all of this. You won't have to deal with any of it. But there goes a significant percentage of your profit. So it just depends on what you want to do and if that's worth it to you. So as we get these properties, again, management company, you being the property manager, there's some advanced techniques here that you may, for protection reasons, want to create a separate LLC for each individual property. So if something goes wrong with that property, they're going to sue the LLC and not you as an individual. And again, check with your accountant, your tax advisor, anything like that for those overall protections. And then obviously looking at the biggest piece of this as we finish the presentation is, so what do I do today to get started? Like, what is the next step? So think about, who do you want to work with as your guide? What area you want to be in? What property type you want to have? Are you going to fix and flip or do a long-term buy and hold situation or a BRRRR method? And are you, after you do that, are you going to use a management company or are you going to handle it yourself? And then from there, look at your strategy and just set a goal. Especially on our real estate organization, a lot of this is, how many investment properties are you going to own in the next 3 years? It isn't a matter of if you're going to own one, it's how many are you going to own in the next 3 years. Start with declaring that number and then reverse engineer everything you have to do to get there, and then rely on trusted professionals for all the questions and information. All right. So that is our intro. We're going to have advanced classes as we move forward, but that was the basics of it. Before we jump off, any questions for me about investing in real estate, general real estate questions, haircut styles, anything I can help with in general? That means I did my job right. Oh, someone asked, how was I able to purchase in the 55 plus? Oh, that is a great question. How was I able to purchase in a 55 plus community when I am not obviously 55? So little secret here is, you can own in a lot of 55 plus communities as long as you're not the owner occupant. Right? Because yeah. So in their bylaws, right? So think about it. I could buy it for my mom. Mom could live there, right? And she could enjoy it. So they have that set up that way. I could just never occupy the property for at least 40 more years until I'm 55 when I get to that age. but I can buy it and still own it as an investment property? That was a great question. I love that. All right. So hope it was valuable. Let us know, reach out to us, connect if you have any questions. It's not that hard, but it just takes a little bit of setup. So I'm excited for all of you. Call, email, text me if I can do anything to help, and I wish you great success.